Hello, everybody. Welcome back. In today's video, we dive into FedEx, ticker FDX, which reports fiscal Q1 earnings on September 18th, 2025 after the market close. We'll go over what analysts expect, the key risks and levers that could move the stock, plus trade setups retail investors and short-term traders might consider. Let's get into it. First, some baseline figures. Consensus estimates for Q1 are for earnings per share around $3.68 to $3.71 and revenue in the ballpark of $21.8 billion. The company had earlier issued guidance for Q1 with a revenue range of 21.0 to 22.0 B, which is slightly below some analyst expectations. Note, in recent quarters, FedEx has lowered outlooks, and there's pressure from weak demand, trade policy headwinds, and slowing business-to-business B2B volume. What to watch in the report margins? Can FedEx deliver on cost savings or margin expansion? With inflation, wage costs, fuel, lease, rental costs, etc., any favorable margin news could boost the stock. Volume trends by segment: express, ground, freight. Which of these will show strength or weakness? The B2B side has been under pressure. Demand from industrial clients, from trade, etc. will matter. Guidance: how management projects full year or upcoming quarter, especially given previous dampening. Will they revise up or down? Traders will especially react to any shift in guidance more than just the numbers themselves. Trade policy and global shipping. Impacts of tariffs, international volume slowing global trade will be watched closely. Are there new risks or easing? Cost structure, fuel, labor, capital expenditures. Also, any update on their cost savings transformation program. Seasonal peak period commentary. As we approach holiday shipping season, what are their expectations and is management confident? Risks and potential surprises. Weakness in B2B demand. If industrial activity slows, packages that are business shipments drop off more sharply than e-commerce. Foreign operations and ramp. Currency risk, any macroeconomic shocks, supply chain disruptions, etc. Trade policy, tariffs, changing regulation, import-export constraints. Inflation and input costs, fuel, wages, maintenance. If costs jump unexpectedly, margins get squeezed. Guidance shocks. Many stocks move most on forward guidance rather than the quarter itself. A downward surprise in full-year outlook could lead to sharp downside. Conversely, possible upside surprises, stronger than expected domestic demand, ground express, cost savings beating expectations, easing trade barriers, or favorable currency moves. Technical trading setup considerations. Implied volatility: options traders should look at IV in FDX ahead of the earnings date. Typically rises, then collapses after the announcement. Possible strategy: straddles, strangles, or defined risk spreads. Support and resistance zones. Identify recent price levels where FDX has found support or resistance. A sharp miss or guidance cut could break support. A beat might retest resistance levels. Volume and momentum preceding the earnings. See whether there is accumulation, so institutional activity ahead of earnings. That may give a clue about sentiment. Risk management, stop losses important. Earnings announcements often bring gaps. For swing trades, decide beforehand what outcome you can live with. Scenario analysis. If-then cases. Scenario A, earnings beat plus strong guidance. If FedEx beats both EPS and revenue and guidance is upbeat, especially on freight and app margins, then we might see a post-earnings pop. Resistance levels in the $240, $260 area could come into play depending on where price is at the release. Option traders could benefit from bullish spreads. Scenario B, mixed results. Maybe they beat revenue but miss EPS or vice versa. Or guidance is cautious. That could lead to volatile, range-bound trading, perhaps a sell the news move. Volume might spike, but price reaction ambiguous. Scenario C, miss plus weak, guidance, risk of downward move. If cost pressures are worse than expected or volume falls off, stock could drop significantly. Could break key support, triggering stop losses. Opportunities in puts or bear spreads for short-term traders if risk appetite allows. What to do now before earnings? If you're positioning ahead, be aware of risk-reward. Don't overextend it. For traders, consider lighter positions, defined risk, have exit strategies, maybe leg into options rather than large stock exposure. Monitor upcoming indicators, industrial activity reports, shipping indices, recent import-export data, trade policy headlines. Anything that might update expectations. Aftermarket, pre-market movements matter. Once the earnings come out after market close, we're ready for large overnight moves. FedEx's September 18th earnings is shaping up to be a key moment. With subdued demand in some areas, cost pressures, trade policy, and margin dynamics all in play, there's upside potential, but also real downside risk. For retail investors and traders, the key will be to watch not just the numbers, but what management says about the future. If you trade smartly, there are opportunities, but also risks you can't ignore. Thanks for watching. If you found this helpful, hit the like button, subscribe, and let me know in the comments what your expectations are for FedEx, beat, miss, or somewhere in between.